So it shows that there became a deficit. That means US imported so much suddenly that it started to show a negative impact on the GDP. It started to show that GDP is actually going negatively. Why did that happen? Well, the reason that happened on the 3rd of March is because on the 4th of March, Donald Trump was going to impose tariffs. So what the importers in the US did was that anything they had to import, let's say a little while in the future, they said, let's just import it right now. So I don't have to pay that much duty. Otherwise, the things that I'm importing are going to cost more and my profit margin is going to go down. So they suddenly imported a lot. And so the net exports became negative, and that started to show a sudden spike in the GDP's degradation. Now, ever since then, the GDP has now slowly started to go back up. Now, it's still in the negative territory, but slowly started to go back up. And why has that happened? Because I guess that sudden net negative export, the net export is not that negative anymore. So if you have a look, it's started to go down. So minus 2.2, minus 2.1, 2.6, 0.7, etc., etc. Okay? So that was the sudden effect of what happened. Now, if the GDP remains negative for 2 straight quarters, that by book is called a recession.
Recession, yes.
So we'll wait and see what happens. If that really happens, then we'll wait and watch what that does. Now, the question that you asked about the interest rates going down.
Interest rates, yes.
So we have to discuss that. So we should turn our attention to Feds because that is a big question. Will they start cutting interest rates this year? We know that an FOMC meeting was just held last week and they decided not to cut interest rates. Why did they decide not to cut interest rates? Because they thought everything was still under control. The inflation hasn't gone up drastically, which means things haven't become expensive. Because if things become expensive, they become expensive because of demand. And if demand is too high, they have to raise interest rates to bring the demand low. Why? Because the flow of money is going to go, they want the flow of money to reduce. So they didn't do that. They thought everything is okay right now. We don't need to be that worried. But what is the forecast of the FOMC? So here's something that I get. These are target rate cuts, and this information is available freely in cmegroup.com. You can just go and download. And I like to look at these very regularly. So what this shows is what is the possibility of interest rate cuts in different times this year. So the very first one I have here is June. So currently, as the interest rate is between 4.25 and 4.5%. Or no, actually, sorry, it's between 400 and 4.25%. This is the current one. So it's expected that in June, the interest rate will remain the same. But in September, it's expected that the interest rates will be cut down by 25 basis points to 3.75 and 4%. And what is the probability of that? 42.8%. Again, these are probabilities. These can change. But as of the way things currently stand, this is the expectation. And then in December again, there is an expectation of a rate cut to 3.5 to 3.75, again by 25 basis points. Okay, so here are the 4 reasons why I think the Feds might cut interest rates if the following happen, right? So number 1, GDP stays weak. So if the economy continues to slow down, and especially if the quarter 2 GDP goes negative, the US will technically be in a recession, as I just mentioned a little while ago, right? That's when the Feds are going to step in and they're going to say, okay, let's cut the interest rates to jumpstart the economy and let companies start taking money and start doing investments. Second, if the unemployment jumps, which means if more people get laid off. So right now, most job losses are in tech and government sectors, and I have a slide that will discuss that as well. But if the layoffs spread across other sectors and the unemployment rises sharply, then the Feds are going to come in and act and save the labor market. Next, if the inflation cools down. So if the inflation continues to ease on its own because of weak demand.
Be sure to listen to Mr. Smiles next week with more golden nuggets and top-notch coaching tips. You can reach him by going to VinneyChopra.com. Be sure to like, comment, and share to show everyone how Mr. Smiles has brought your apartment syndication business to the next level.